Is gold going to hit $6,000 soon? That's the big question investors around the world are asking at this point as gold prices surge to record levels, driven by the rising global tensions and growing uncertainty about where the world economy is really headed. And on Thursday, gold prices soared to a fresh record, near $5,600. Its highest level ever. The rally comes after US President Donald Trump sharply escalated his warnings against Iran, raising fears of another military confrontation in West Asia. At the same time, oil prices are rising, currencies are weakening, and financial markets are turning cautious. And all of this is pushing investors towards one asset that they traditionally trust in times of trouble, and that is gold. So gold continues to rise sharply, triggered by multiple reasons. Essentially, Trump has warned Iran to return to nuclear negotiations, like we said, and hinted at possible military action if talks fail. Reportedly, the U.S., meanwhile, has moved warships into the region. Iran has responded with threats of its own. And all of this has revived fears of conflict in the region that supplies a large share of the world's oil. Whenever tensions rise in West Asia, global markets become nervous. Investors worry about disrupted trade routes, rising fuel prices, also wider instability. And when the fear rises, money usually flows into safe assets, like gold. The second reason is the weakening US dollar. The dollar is the world's main currency. It is used in global trade, oil pricing, central bank reserves. And when the dollar weakens, it signals that investors are losing confidence in the US economy or its leadership. A weaker dollar also makes gold cheaper for buyers in other countries, increasing demand. Recently, Trump has suggested that he is comfortable with a weaker dollar because it makes American exports more competitive. And that message has added pressure on the currency and boosted gold further. The third factor, interest rates and the U.S. Federal Reserve. The Federal Reserve, or the Fed, is America's central bank. As you may be aware, it decides how expensive or cheap borrowing is, not just for the U.S., but for much of the world. Because the U.S. economy is so large, Fed decisions in a way influence interest rates, investments, and currencies globally. At its latest meeting, by the way, the Fed kept interest rates unchanged, but investors believe rates could be cut later this year. And this expectation is linked to Trump's plan to appoint a new Fed chair soon. The Fed chair, of course, is one of the most powerful economic figures in the world. Their views shaping how much money flows into markets, how strong the dollar is, and how risky assets perform. Many investors expect Trump to choose someone with a dovish stance. But what does that mean, really? A dovish central banker prefers lower interest rates and easier money policies. They focus more on supporting growth and jobs, even if inflation rises. The opposite is a hawkish official, basically someone who keeps the rates high to fight inflation. If a dovish chair takes charge, interest rates are more likely to fall. And when rates fall, gold becomes more attractive. And that is because gold does not pay interest. So when bank deposits and bonds offer lower returns, investors are more willing to hold gold instead. And all of this is happening against the backdrop of the growing political uncertainty. Trump's tough language when it comes to Iran, questions over the American economic policy, debates over the dollar's role in the world, concerns about global leadership, all of this put together, creating what analysts describe as a trust problem. Market strategists say gold is no longer behaving like a normal commodity. Instead, it's becoming a measure of confidence. And when people trust governments, institutions, currencies, gold prices usually stay calm. When that trust weakens, gold rises. In simple terms, investors are buying gold because they are unsure about who and what to believe anymore. And the impact is visible across markets. Oil prices are climbing on fears of supply disruptions. Asian and European stock markets moving unevenly. Some countries like Indonesia, in fact, are seeing sharp volatility. China's troubled property sector is showing signs of stress again. And currencies remain under pressure. All of these signals point to a world economy facing multiple risks all at once. Geopolitical, financial, political. So the question still is, can gold really breach $6,000? Can it reach the $6,000 mark? Some experts say It is now possible if the tensions with Iran continue, if the dollar stays weak, and if the interest rates are cut. Others warning that prices may fall if diplomacy succeeds or the markets calm down. But then one thing is for sure, this rally is not just about speculation. Gold is rising because uncertainty is mounting. And until that certainty fades away, investors are likely to keep turning to it for safety.